Last week, we saw the market, the S&P 500, had a huge swing of over 13%, close to 13.5%, or 650-point swing from the low to the high. And in addition to that, we also noticed that from the low of last week, it was actually 27% below its all-time high. And so definitely that put the S&P 500 into a bear market for a time. But at the end of the week, it actually closed only down somewhere around 10%, a little bit over 10% from its all-time high. So basically, we're looking at somewhere around 12%. So it is still in a correction territory and not in a bear market territory. So what will the coming week bring? In this video, we're going to take a look at some of this price level and some of the price zone to keep an eye on for the coming week. So stay tuned. Last week, we saw the VIX spike above the 50 level. And the last time that we saw a VIX at this level was back in April of 2020 in the pandemic area right here. So that definitely brought a lot of fear into the market last week here. And if we take a closer look, you see it did come back down a bit and close the week at 37.5, but that is still relatively high in this recent standard here, right? But the put call ratio, amazingly, it is below 0.75. So obviously there's some buying on the call side here. So maybe there's some sneaky buyers here buying up some of the call, anticipating a little bit of a higher move for the coming week. So we'll see. And look at this crazy move on Wednesday, right? When President Trump decided to put a 90-day pause on the reciprocal tariff, and the market just took off. And here is the up-down volume ratio. The peak was 63.40 to 1 in favor of the upside. So that's definitely some mad panic buying and short covering going through there. Like there's nobody is selling anything. And here on the up-down, on the daily advanced decline, it was 2381 advancing issue, more advancing issue than declining issue. This is pretty close to 90%, if not more, of the traded stock in the New York Stock Exchange was on the upside. But then you look on the following day, we got this massive, reversal here on the advanced decline, and we saw 2387 more declining issue than advancing issue, but the up-down volume ratio wasn't that bad. So there's some reaction, but the volume, because a lot of these short covering was taking place here, and that's what pushes a lot of these, the up-down volume ratios to some ridiculous level. But on Thursday, on this, pullback from the previous day, it was a little bit more reasonable, right? A little bit more normal in a sell-off type situation. Now, notice we did see a spike down on the new low, new high, new low on the New York Stock Exchange, and you can see that on that Monday we have over 1,136 new 52-week low, right? And there were how many more? 1,135 more new 52-week low and 52-week high. So in other words, there was only maybe one new high. Yep. Well, there was actually one new high, right? On that particular on Monday. So definitely it was a washout on that Monday sell-off there. We did get a little bounce off the low, right? You can see that. And here looking at the cumulative AD line, didn't do too much after this big gyration of up and down here. And also, the massive amount of new, advancing issue over the declining issue, and then vice versa on the following day. So what it is now is pretty much sort of a neutral, didn't do much, didn't change the picture a whole lot. Now looking at the Nasdaq also have the similar type of price gyration as the New York Stock Exchange or the S&P 500, but the up-down volume ratio was not as ridiculous as the New York Stock Exchange. But if we look at the Nasdaq 100, up-down volume ratio, that probably would kind of tell you a different story because everybody was rushing in to cover some of those short on those Magnificent Seven stock, and that pushes the up-down volume ratio to some ridiculous level as well. Now we did see a bond market advance on that short covering day, right, on Wednesday, but also we saw a mass readjustment on getting back to a little bit of reality on Thursday. That we also saw bond market decline, participation in the decline by looking at the daily advance decline. And just like the New York Stock Exchange, we also saw a spike up on a number of stocks making new 52-week low, and we saw a spike down on the new high, new low, and it went down to that 1,300, 1,564. Okay, so more new 52-week low than 52-week high on that Monday. Now on Friday, it's kind of come back up a bit, and also the number of stocks that make new 52-week low came down dramatically from Monday. There were only 201 stocks make new 52-week low on Friday. So again, similarly to the New York Stock Exchange, the Nasdaq cumulative AD line did not change much at all after this huge gyration and a big swing week up and down. So all in all, the picture remained pretty much the same here. So other than some big fear, going to on Monday, and this huge gyration of the price from the low to a high, basically, we are still looking at a sort of a downtrend here. Now, will we be able to break this price structure and put in a higher high and then a higher low to break this downtrend? Well, let's go and take a look at the price action of the cash index and also the futures and see what they are telling us. Now, looking at the last week's price action, we see that on Friday it actually came back up and closed near the upper range of the expected move. And also it came down on that low for the week. It came down to this 4,800 zone. See how they got a nice bounce back up and touches the 5,100, sort of bounce around here on Thursday before it pushes back up into this 5,400 zone. Remember last week we were talking about to keep an eye on this 5,400 and also the possibility of the 58 and then this 51, and if we break the 51, we'd be looking at this 48. So we definitely did not expect that type of a price action, although we have the zone out there for that possibility, but it is kind of surprising to see this type of a swing in a single week. And therefore, the coming week, the market is pricing in the upper range between 5,600 and 5,586.50. And the low range is between 5,140.20 and 5,045. So we'd be looking at a possible retest of this 5,100 zone once again. But if it pushes above this 5,400, we're basically looking for the S&P 500 come in and fill this gap and possibly get up to this 5,600 and pushes up into this 57 area between the 5,600 and 57. So we have a little of a price zone here, support turn resistance or resistance turn support here in this area. So keep an eye on this zone here. If it pushes up and get above the upper range of the weekly expected move. Now, if it's unable to get above this 5,400 or get pushed back underneath the 5,400, then we'd be looking for possibility of coming back down into this 5,100 zone and do a back test of it and see would it hold and form a higher low. Then it could, put in a, little bit of a higher low and possibility for setting up for a potential higher high in the near term, and maybe that will reverse this downtrend. But if it doesn't, say come back and it doesn't hold this 5,100 area and pushes down, then we'll be watching this 4,800. And if it take out this 4,800, then basically we have put in a lower low, and this downtrend is most likely will be continued. Look at the ES here, the E-mini S&P 500. Notice it also came up to the upper range of the weekly expected move and settle up that area there. Now also it came down and got pretty close to the 4,800 level, but it did not come down and tag it. but it did come up and got a little bit of a reaction here, somewhere around this 5,300 area, this low volume zone, and before it pushes back up into the upper range of the weekly expected move. And here for the coming week, the market is pricing in 56.30 and 55.79. So it is somewhere into this 5600 zone. Okay, so it's 56.30 and 56.19.50. That's the upper range of the weekly expected move for the coming week. So basically, it's looking for a potential price move to come up and retest this 5600 zone here. So basically looking for the price to come up from this 5400 and push up in this zone and see would it continue to push higher and up into the 5800 area. Even though if it come up to the 5800 area and get rejected pushing down, we are still looking at a lower high. So it has to get above this 5900 area here in order to break this lower high type of a scenario. So we still be watching for the price, would it come up and break this 5800. So, but most likely we probably will see a test of this 5600 and try to push up to the 5800. And I doubt it will get back up above the 5900 up in this area. So we probably will get a rejection or either from the 5800 or the 5600 and get a rejection back down into this 5400 area. And now notice that the lower range, the market is pricing in a 5172 and 5070. So it is pricing back a retest of this 5200 area. So I wouldn't be surprised to see a push up and put in a lower high and possibly come back down and try to retest this 5200. Now, depending on what to be able to hold this 5200 and get a bounce back up to put in a higher low, or would it continue to push down and break this 5200, then I'd be looking at the possibility of come down and put in a lower low by dipping below this 4800 area. And for the SPY, just like the ES and also the SP500 cash index, it came up and closed near the upper range of the expected move. And also it came down and tagged this 480 zone here before it popped back up. So right now it is sitting right at this 540 area. And for the coming week, the market is actually pricing in the possibility of moving back up into this 560 area because the upper range is between 558 and 556.10. So that is a possibility for the price to basically come up and break through this 540 and possibly push up into this 560 area. Then we'd be watching for a possibility of a rejection and pushes back down. Now, if it's unable to push through this 540 next week, then we'd be watching for it to come back down into this 530, break below this 530 zone and work down toward the lower range of the expected move, and that is between 510.80 and 502. So that would be an area to keep an eye on again to see would it be able to get a bounce back up from this range and put in a higher low to break this lower high, lower low type of a structure. But if it's unable to hold this 510, 500 area and dip below this 500, then I'd be watching for this 480 area and see would it be able to hold this 480 area and possibly put in a double bottom. But if it take out this low, then we're basically going to be see a continuation down on this price action of a lower high, lower low. So we continue to move on that downtrend. And here looking at the NQ, the E mini Nasdaq 100 future, see that it also came up and closed right near the at the upper range of the weekly expected move. Now, they come down and find a little bit of a support here in this high volume zone here near the 18,000 level on Friday. So it was on Thursday, came dip below that and immediately we got some reaction and pushes back up. Now, it did come down to this 1680, this little bit of a high volume zone broke through and came down and tagged the lower range of the expected move. It did not come down to this 16,400 zone here, but it did come into this lower range and then got to push back up. So right now we're basically looking to see is this upward movement from the latter part of last week will continue to move up. And looking at where the market is pricing in for the coming week, it is pricing in an upper range between 19,725 and 19,657.75. So it's not that much of an upside movement here, but although it still have the possibility to come up and test this high volume zone here and then pushes up here into the upper range. So that is still, if we get a rejection back down, it is still way underneath this high here up at this 20,500 area. So the market is not pricing too much of a upward move for the NQ. Now, if the NQ is come down and break this 18,000 level again, and that's where the lower range is actually be pricing in for the coming week is 17,983 and a quarter and 17,600. So if we break this the high volume zone and come down to this lower range and unable to hold this lower range, then we'd be looking for the possibility to come back down to at least test this 16,800 and see would be able to put in a higher low for a double bottom type of price action to bounce back up. And if it doesn't and break this 18,800, I'd be looking for the possibility of coming dip below this 16,400 to put in a lower low. And looking at the QQQ, the ETF for the Nasdaq 100, it actually closed above the upper range of the weekly expected move just by a tad. And also it came down and tested the this zone here somewhere between the 410 and 420, so somewhere around the 415. But it did dip below that, but unable to get down to this 395.50 or below the 400 area into the lower range of the expected move. Now you see that it did find support, a little bit of a reaction here in this 420 area, this 415 zone here between this low volume zone between the 420 and 410. So basically right now we are looking at the possibility to see would the price continue to move higher or will it come back down. And here's what the market is pricing in for the coming week. The upper range is between 477 and 475.30. And the lower range is 433.50 and 425. So looking at these range, there is a possibility for the price to come up to this 470 and push up into this high volume area here near the 480. But it's still pretty well beneath this high. So we're still looking at a lower high, even though it come up to the upper range. It had to get above this 500, almost 500, this zone here, this high volume zone, to break this high in order to make a claim that this structure have changed from a lower low, lower high to a possibility of a higher high, and then we'd be looking for a higher low. Now, if the price is unable to come up to the 470 and break into the upper range, instead, if it get a rejection and pushes below the 450 area, then we'd be looking for this lower range to be in play and see would it be able to hold this lower range between 433 and 425 and get a push back up to put in a higher low. If it is unable to hold this lower range, then we'd be looking at the possibility to come down and see once again the last opportunity to see would it be able to hold and put up a higher low here near this 410. And if that is unsuccessful, then we'd be looking for a continued dip into this area here beneath the 400 level. So that would be a continuation of putting in a lower low. So those are some of the price action and price zone to keep an eye on for the S&P 500, the E-mini S&P 500 ES, and the SPY, and also the NQ and the QQQ. So I hope you find this video to be informative and useful and give you some insight on what are some of the possible price scenarios to keep an eye on for the coming week. And if you do, then be sure to smash the thumbs up to help promote this video. And also subscribe to this channel if you're new to this channel. And also, if you'd like to see additional content from me, go visit my newsletter, The Pulse of the Market, at substack.com. I have the link in the description below, and you could find some stock analysis on the Max 7 and also some additional level that I talk about on a daily basis, trade the ES, the SPY, the NQ, and the QQQ that I publish a daily trading plan. So be sure to go check out that newsletter. Once again, the link is in the description below. Thank you for watching, and good luck on your trading, and stay safe.